said, "We fought the gas war, and gas won." Probably not surprising. Gas won. Well, gas is sure winning these days. $4 a gallon, $4 plus a gallon. Oil flirting with $140 a barrel, up and down like a yo-yo. Now, some say, well, that's just the market at work. There's no market at work here. This is a perversion. Let me talk about the oil market. You got the OPEC ministers representing companies called OPEC. Now, this is a cartel. Cartels are illegal in this country. It's a crime. It's criminal. So you have a cartel of countries that go behind closed doors and have their oil ministers make judgments about how much they're going to produce and what price they want to get for it in the international marketplace. That's number one. No free market about a cartel, I expect most people would agree. Number two, the oil companies, the major integrated companies, are all much bigger and stronger with much more muscle in the marketplace. Why? Because they've all merged. They all got romantically entangled, one to another, decided they wanted to marry up. Pretty soon Exxon is not Exxon, it's ExxonMobil. Pretty soon Phillips is not Phillips, it's Phillips Conoco. They all have got two names. A lot more muscle, bigger and stronger and more powerful in the marketplace. And third, a futures market that has become an unbelievable amount of speculation, driving up prices. A cartel, bigger, stronger oil companies, and a futures market that is rife with speculation. Fidel Gates, senior market analyst, energy analyst, worked 35 years, still with the Oppenheimer and Company. Here's what he said. There's absolutely no shortage of oil. I'm convinced that oil prices shouldn't be a dime above $55 a barrel. I call it the world's largest gambling hall. It's open 24/7. Unfortunately, it's totally unregulated. This is like a highway with no cops, no speed limit, and everybody's going 120 miles an hour. Now, I've talked to Mr. Gate by telephone. He's come to a hearing, so I have a sense of what he's about and what he thinks. He believes this market is a complete perversion. It's rife with speculation, with people driving up the price of oil, having nothing to do with the fundamentals of supply and demand. But it's not just Mr. Gate from the Oppenheimer and Company. Experts, this is from the New Jersey Star-Ledger, experts, including the former head of ExxonMobil, says financial speculation in the energy markets has grown so much over the last 30 years, it now adds 20 to 30% or more to the price of a barrel of oil. And so the question is, if the former head of ExxonMobil is saying that there is so much speculation that it's added 20 to 30% to the price of a barrel of oil, is that credible? Well, Senior Vice President of ExxonMobil, the price of oil should be about $50 or $55 a barrel. President of Marathon Oil, Clarence Cazelat Jr., quote, $100 oil isn't justified by the physical demand in the marketplace. During a question and answer period with reporters, he suggested a more reasonable range for crude oil prices would be between $55 and $60 a barrel. So, the Commodity Futures Trading Commission, that's supposed to be the regulating body. And I know regulation is a four-letter word in this chamber for some, not for me. A free market works only when it's open and free. When the arteries get clogged, bad things happen. And we've seen a lot of clogging of the arteries of this free market system. But we have a referee for the free market system. It's called the Commodity Futures Trading Commission. Like everything, it's got an acronym, CFTC. Now, the CFTC is supposed to be a regulator. But like a lot of regulators, it seems to be pretty much asleep at the switch. And I'm going to describe why and how in a minute. But I want to say that I've got some experience with this because I chaired the hearings here in the Senate over in the Commerce Committee on the Enron scandal. I had Ken Lay, now deceased, come to our hearings. He was the CEO of Enron. He raised his hand, took an oath, then sat down and took the Fifth Amendment. He was subsequently sentenced to prison, but died before he went to prison. But others in the Enron Corporation went to prison because we discovered when you open it all up, it was a criminal enterprise, among other things. A criminal enterprise that soaked billions of dollars of ill-gotten gains, particularly out of consumers on the West Coast for the wholesale electricity prices. Now, That happened under the nose of what was supposed to have been a federal regulator, the Federal Energy Regulatory Commission. During that time, I raised the questions about the speculation and the manipulation of the marketplace by Enron and others. Vice President Cheney scoffed and said, "There's nothing going on here. Shame on all of you for suggesting there's something nefarious happening." Well, it turns out Dick Cheney was dead wrong, supporting the energy interests ahead of the public interest. We found out later it was a criminal enterprise. And we found out later that the regulator did nothing, sat by and watched what was happening. Now we have a regulator, the Commodity Futures Trading Commission, that is supposed to be wearing the referee's shirt, the striped shirt that calls the fouls with respect to energy trading. The Commodity Futures Trading Commission has actually allowed a lot of this to occur, this speculation, by issuing what is called no-action letters, so that a number of commodity trades can move to the dark side so they can't be seen and can't be regulated by the regulator. Having a regulator say, it's okay for us not to be able to see you or understand what you're doing because we choose not to regulate you is kind of an unbelievable, well, I was going to use a different word. I shall not use that word. It defies credibility to hear a regulatory body say, we don't want the information with which to regulate. Well, let me just describe what the head of the Commodity Futures Trading Commission, again, this is the regulatory body, has been saying. Mr. Lukens, maybe this is, well, I think it's okay. I'm using a description of what he is parroting. He is parroting the assertion by those involved in the market and who make a lot of money in these markets that really nothing is happening. There's not substantial speculation. This is just a lot of good people back and forth selling and buying. And here's what Mr. Lukens says. He says, based on our surveillance efforts to date, we believe that energy futures markets have been reflecting the underlying fundamentals of those markets. That was last July. So Mr. Lukens says, you know, gosh, things are fine. Don't worry, be happy, everything's okay, the fundamentals justify whatever's going on. That was last July. The chairman of the commission, Mr. Lukens, again said, January of this year, based on our surveillance efforts to date, we believe that energy futures markets have been largely reflecting the underlying fundamentals of these markets. You'll note he said in January exactly what he said in July, but he changed one word. Must have been a mistake. Changed one word. Essentially said, hey, you all, don't worry about the price of oil and gas. This is all about the fundamentals. And so the chairman of the regulatory body says things are okay. Don't be too concerned. February, Chairman Lukens says the Commodity Futures Trading Commission is confident that U.S. futures exchanges and clearinghouses are functioning well, especially during these turbulent economic times. Don't worry, be happy, everything's okay. We regulators, we got our hands on it, we got it all figured out. May 7th, the chairman of the regulatory body says we can say with a high degree of confidence that people are not manipulating the energy markets. Well, that's really interesting because 2 weeks ago,